in this shortened week, there's also going to be an ECB and a Powell event going on. So this Thursday is a real big deal. Otherwise, we're going to just really continue to focus on anything that the Fed has already described as being their top priority, right? They want to see a clear and convincing trend lower in inflation, right? They want to know that what they're doing is working. And part of that means destruction in employment, right? Where they want to do demand destruction, wealth destruction. They don't want the market going too high too fast, or even just too high at all. So they'll go out, do speaking engagements, show up on TV, give their opinion. But during all of that, they've also said these are the things that we're really watching for, right? They're looking at those unemployment numbers, CPI, PPI, and anything that correlates into that. It's what we're going to want to focus on today as well and throughout the week. So today we have ISM manufacturing at 10 a.m. And we have an ECB speaker at 9:45. Right, so that's two of the big ones. Yeah, the rest is bond and FX. That's really the rest of what's been happening this morning. So here we're on Thinkorswim. Go to Market Watch, calendar. If yours is really busy, it's cluttered and full of stuff like this, easiest way to get it to what you want to see is just turn everything off. Turn on the Econo Day event. These columns can be moved around, so I put the description next to the time, and we can see ISM at 10, PMI at 9:45, and then we have additional auctions today. They're all at 11 and 11:30 time frames. We don't have any 1 o'clocks. Oh, then let me rephrase that. We do have a 1 o'clock today, the 52 week. So 11, 11:30, and 1 o'clock. We've got auctions today. These, even though they don't get a lot of hype, they don't get a lot of fanfare, and most of the time, if you were to look at them, like on Econo Day's website, they would not show as very impactful. We certainly don't get moves like job numbers when these numbers come out, but these are often to the minute where I've seen a market completely reverse and change course on the day. If we have been in a range-bound market all day long, one of these come out, I've seen a market break out on the minute, right at 11:31, and just start running. So calling the low of the day, calling the high of the day, looking for midday reversals, midday breakouts, a lot of times it starts for me with asking the question, are there any additional auctions today? So keep your eye on those. Watch the clock. I constantly say it, watch the clock. All right, we're going to step out just a little bit, go to the bigger picture for a moment. Right now we're on the daily. I want to do a little bit of a top-down approach. I mentioned this Friday, but it's always worth mentioning. This was the expected move for last week, and that was a 5-day week. Right? Like, thanks, Captain Obvious. We already figured that out. This is the expected move for the new week. Now, expected moves are derived from volatility. When volatility is low, the size of this box will be a lot smaller. And that makes sense, right? We're not likely to travel as far if we're in a lower volatility environment. Volatility is a nerd word for movement. So if we're in a high implied volatility, those words high implied is like promise. All right, that's another nerd word for promise. So high implied volatility means promise of big movement. lower implied volatility, smaller promised movement. Well, the volatility went up significantly. The size of the box from last week to this week, not only is this week bigger, it's a 4-day week and it's bigger. So it's more than just this little quarter of an empty box down here. It's a missing day and that little quarter of a box down there, right? So the amount of volatility that's priced in right now is way more than we had last week. That box doesn't even tell the whole story, right? $3,900 is an absolutely critical level. It has to hold. We break below 3,900 and get a daily close below 3,900, we're very likely going to retest these June lows. All right, now, of course, nothing's guaranteed, but the fact that we already have set lower lows after this run up and now lower highs as well kind of already brings us to the conclusion that, we're trending down. Lower highs and lower lows, not just an impulse. So we're going to be looking for that next leg up after getting that swing low, swing high, swing low. We're now due for a new swing high. Benchmark right now is around 40.50, maybe 4,100 if we happen to break through the top of this structure. And that'll put us right on the boundaries of the weekly expected move to the top side. We can overshoot it, kind of wink through it a little bit, but we don't expect to close the week higher than, call it 40.70. As long as we don't break above 4,200, then we're going to get that lower high, and that will all match and be a part of the structure that we're looking for. All right, so now we'll bring it into the intraday. We want to look at the current volume and compare it to the same time of day on previous days, which is why I have that white line there. Today's volume at 7:30 was around 117. That's not too bad. We had 81, 91, 144. I know those are probably hard to read in the stream, but basically we're in line. We're not crazy super low, and we're not, crazy super high. And that's all we use it for. A quick glance. Are we within the average volume structure? Yep. Okay, turn that off. From here, bring up the 15-minute chart. Look at yesterday first. It was a very muted range. As a holiday day, you're better off taking that day and applying it to Friday, or taking that day and applying it to this morning. So if we take Friday's level, all of Friday, from the highest point Friday to the lowest point Friday, and then we ignore the fact that Monday is its own day, we'll just use Monday as a part of our Globex analysis. From the lowest point of the Globex Monday to the highest point of the Globex today. So that's our structure right now. Now we could stay within that structure, 39.64 down to 39.14. It doesn't owe us any more than that, but that's a pretty narrow range in the grand scheme of things, and in this current high volatility environment, I don't think that we're going to stick that range. Within that structure, we do have the daily pivot 39.52. We have the weekly pivot, which is well over our head, so we'll get there in a minute. You're going to want to ignore any of the micro pivots like yesterday's cash open and yesterday's cash close. We only want to focus on Sunday night's open and then the low and the high. The open from Sunday night was 39.29. So that gives us 3 major pivots plus the daily pivot. Now from that, we want to have the discussion, what if we break to the upside? Where could we go? If we break to the upside, we're still going to be inside Friday's level. I don't see that we're going to get outside of it today. But we got a half of an ADR, 39.65. Then we have the weekly pivot, 39.70. We have a retrace, 786, which is at 40.37. And then we've got last week's high, 40.72. And we have a full ADR at 4,000. And then there's, of course, like a cog line at 40.10. Now, a good way to approach things is to do what I call a 5x5. With a 5x5, you do a top-down approach, and you mark down any relevant levels and all of your pivot points. So, are we moving towards any major moving averages? Are we moving away from any major moving averages? Are we going to hit any of those today? Those are things you're going to want to answer so that as you come into the trading session, when price suddenly turns around on the drop of a hat, you're not sitting there trying to figure out why did it just turn around? Say like yesterday right there, right, with that turnaround. I haven't installed that pointer yet. When you can figure out what we hit or that we're going to hit something, then the rejections make more sense and you can trade into it with conviction. Same thing on this low here. You know, being able to, hey, what did we hit? So during that top-down approach, keeping track of your pivot points, just writing them down, draw a line on them, whatever. Where's the 20? Where's the 50, the 200, the 10, the 4? All of those daily moving averages, weekly moving averages. Just, if you don't like a bunch of clutter or lines all over your chart, just write them down, refer back to them through the trading day, set an alert. That works out really good, right? Like right now, I want to trade the breakout of this Globex, and I've got an alert set so that if we do break through the top of this highest Globex point, it's going to get my attention and let me know. That way, if I'm distracted, I don't miss it. All right, so that's the top side breakout. For a downside breakout, remember we're going to use all of the Globex, so we're going to be looking for a break down below 39.15 first. Then yesterday's low, 39.06, half an ADR, 38.95, and a full ADR, 38.59. We don't have a market maker move right now. If we were to go in and look at, say, all products, there's no market maker move up here across the top. Here we're looking at a 10-day, 30-minute volume profile. It's important to notice we're outside of the box. So normally, when we're at the top of the box, we expect to go to the bottom. When we're at the bottom of the box, we expect to go to the top. When we're outside the box, our first expectation is to get back inside the box. So that's what we're going to be focused on today. It's important to keep in mind, however, that this box moves with price, right? So as more and more of this volume drops off on the backside, the entire box will come down lower and lower. Our current 10-day point of control is at 41.40. If we were to break through that Globex high that I was talking about, we've got a significant level of resistance at that value area high, which would be basically 39.90. If we can get through that, though, we start to get into a shallower zone. Still going to be a slog, one heck of a fight to be able to reclaim, say, anything above 4,000. To the downside, we do have some volume support around 39.27. It's not massive yet, but it is building up. And by support, I mean, don't trust this thing like a handrail. Don't lean on it. Look for opportunities for that move to come back up off of those lows. But you may want to actually let it prove the bounce first before you actually try to trade it, right? Of course, getting in along those lows is still going to be your best entry as close to the low as you can get, because then you can use the smallest stop possible, and if you're wrong, your loss is the smallest loss it could have been. But you might want to let that thing just come up off of that low first, right? If we revisit 39.30. All right, here's the 5x5. You want to carry forward yesterday's point of control or any other point of control that is not touched. And by yesterday's, I don't mean Mondays, right? This is where there's a little bit of disconnect between a lot of brokers. We would want this volume brought in with the current volume. Now, one way that we can do that is to set this thing to the right side. So on expansion, yes. And then for profiles, or for multiplier, 2. Right? We want 2 days in there. Our current day and then yesterday. So when we do that, nope, let's make it 3. Shouldn't be 3. Tick size, day, multiplier, on expansion. We'll do that, but I don't, yeah, there it goes. So I was using the wrong one. It's not multiplier, it's profiles. Right? That shouldn't have done it, but it did. Let's do it a little more. One of those is going to do it, right? Let's take it off expansion for a moment. Right, there's 3. There's 2. Oh, the holiday. There we go. Yeah. All right. So there's the combined volume profile for yesterday and today. Right? That'll give you your point of control for right now. Now, the thing about using today's point of control or today's volume profile, I've never really had a lot of validity to that, right? Like the value area high, the value area low, and the right now point of control. I don't use that as a pivot point. I'll use yesterday's point of control, carry that forward, and expect that if we hit that, there's going to be a reaction in the market. Today's point of control, I don't really hold much validity to it. I don't mind knowing where it is. Definitely want to keep track of it, but I don't really spend too much on it effort-wise. I've got enough pivots to worry about. The reason that I set this way, though, is so that we can see that combination of what we had Monday and what we've had through this morning. So 39.34 is the point of control for the combined Monday-Tuesday flow. 39.60 for the value area high, and then 39.18 for the value area low. Those would be worth at least keeping track of. All right, this morning we had something happening that I have not seen in a little while now. In this big move in oil, we had the dollar moving up, bonds moving up, stocks moving up, all at the same time. Lately, the dollar has been a part of the demand destruction. When the dollar goes up, the S&P goes down. That's what we've been seeing for over a week now. And nothing stays forever, right? Which is why we constantly reevaluate. But that's been like a great tell. You see that dollar beginning to break structure and get a new high on the day, for an example. You can almost guarantee that the S&P and the NASDAQ was about to break lows and make new lows on the day. Just structure-wise, the dollar has been dominant and inverse. But in that move in oil that we saw earlier this morning, we literally had everything else moving up. Now, they decoupled within about 30 minutes, but the coupling was there. Right? If I back up right into that zone. So it's certainly something you're going to want to keep track of. Watch that dollar today. This move in energy, that's massive, guys. In the last week, starting last Monday, that rotation out of energy was huge. It was big. It was really big. Now we're getting this. And there was OPEC news. They don't like that really cheap energy, and they're talking about cutting production. It was in, let me quote it. So, I don't want to take credit, and I want to give attribution where it's due. There's a morning email that comes out from a company called Morning Brew. It's free. You don't have to pay for it. It's a little bit like 5 Things You Need to Know from Bloomberg, only it's more diverse than that. When I was reading it this morning, they were talking about the energy situation and OPEC cut. And of course, it's free, so it's got quite a bit of advertising and junk like that in there too. OPEC and its partners, OPEC Plus, made the surprise decision to cut production targets by 100,000 barrels a day starting in October. They don't like that the crude prices have been dropping, but consumers might be, since gas prices may soon fall below $3. So that's a big part of what we were seeing in the overnight hours with energy. Continue to look for that, right? It's not done yet. So that's part of it. The FX markets are another part of it. Russia flat out made a demand on that gas line. Last week, it was, oh, there's something wrong with it. It's broken. Well, we're working to get it fixed. They threw that narrative out, and now it's, well, we're not going to turn it on unless, and they put a price behind it. So that's something to keep track of too. And I believe that part of it came from Bloomberg. So short week. Really watch the gamma flows. Keep your eye on GEX and DEX. Watch that expected move. We're looking for a significant change in the FX market. So KRE or XLF and a lot of those banking names, I'm going to be putting a lot of my focus in that direction. And then keep your eye on the dollar and its correlation with the rest of the market. The dollar almost made it, not almost, it did. The dollar made it over $10, 110. And some analysts are saying, 150 on the year. Well, there's not much year left. We're already into September. The effects that this is going to have across the marketplace can be catastrophic. And I heard a really smart analyst yesterday talking about a massive capitulation level. So, like, we're not. They say we still got to shake out a lot of the marketplace. And if you consider the fact that, 08 and 2000 bear markets were way more extreme than this. This, some have said, hasn't even gotten started yet. This is just the first leg. That we were going to break the June low and continue to push for that 3,000 mark. And that by the time it's all said and done, a market half the price as what it was as we came into 2022 would be the ultimate goal. So you're talking about, the S&P back to around 2,400 by the time it's all said and done. Way too far ahead for us to focus on today. All right, we're looking at the S&P 100, asking a question: how many names in the S&P 100 are up at least 0.5% this morning? 33. The difference between the S&P 100 and the Nasdaq 100 is that the Nasdaq 100 does not have financials in it. So when I see 33 names are up, my first question: how many are financials? Now you got to watch it a little bit because things like MasterCard, Visa, they don't always land in finance, right? You can see their commercial services or miscellaneous services. So, it's fintech, right? But you got to kind of do a little loop-de-loop. You can add a subsector or a sub-industry column and perhaps sort it by that level. But I'm seeing major banks, Capital One, Bank of America, JP Morgan, Berkshire, Wells Fargo, they're all on that list of having gapped up at least 0.5%. Some of them are nearing that 1% mark. We've also got Tesla up more than 2%, Adobe more than 1.25%, and we got some energy names in there like Chevron. Which, looking at that move down in oil, is a little bit surprising. So keep your eye on the financials. Look for any significant reversal here on the day. Watch for these things to completely flip over and dump. I would rather trade something to the downside that's ran up 3% than try to trade something to the upside that's already up 2%. All right, so if we come into the open and we continue to see financials move to the upside, I may end up taking it, but the better play would be looking for the reversal, right? KRE is your regional bank ETF. So I tend to watch the NY FANG to keep track of the monsters of tech and the KRE to keep track of financials. These are our two risk-on sectors of dominance, so we need at least one of those two. That the fact that finance is up this morning gives credence to the idea that the S&P could be up this morning, that we could get that rally, that breakout of our Globex in the S&P because of those financials. But it's hard to see that the financials are going to be able to cover it alone, right? They're going to need help. And that's where consumer discretionary is going to come in, or tech. We already seen that Tesla was up 2% this morning. That's a good start, but we need more than Tesla. All right, so here we're looking at the NASDAQ 100, asking the same question. How many names in the NASDAQ 100 are up at least 0.5%? 20 names. No financials. Nearing the top of that list again is Tesla and Adobe, but then we've also got Zoom and Qualcomm. Communications, which reminds me, and I put this out last night, communications has a squeeze going on with a projected break of that squeeze to the downside. Now that's a weekly chart squeeze, which generally needs a weekly time frame follow through. So it's not like we're going to just go short in one day because it's like an intraday squeeze. It's on the weekly time frame. I didn't find that, by the way. Give credit where it's due. That was a post from a YouTube page, Thinkorswim Indicators. They use one of their indicators to do the video, and of course they're just trying to upsell Thinkorswim indicators, right? I don't sell indicators. I don't really promote the idea of selling indicators. If it's so darn good, why not give it away to people? Let them make money on it. Well, that's because there's traders who make money trading, and then there's traders who can't trade and make money, but they can make an indicator and sell that and make money. So, you got to kind of ask, where's their revenue stream? Is it from using this really great indicator to make money, or is it from selling this indicator to make money? So I'm not promoting the idea that you should go over to, Thinkorswim Indicators website and start buying indicators. But we can still use their video and recognize that there is a squeeze, right? XRT and XLC have a weekly bearish squeeze. So look for some follow through on that. It was a bearish squeeze, and we're seeing communications up this morning. This could be that last hurrah before we get that flip and it dumps back down, right? And Amazon is another one up 0.5% this morning. So when you look through this list, there are a couple of monsters in there. Amazon, Tesla being two of them. I don't see Nvidia. Nope. There it is. So that's 3 monsters that are on the list. All right, everybody. That is going to do it for me. Be careful. Be safe. Remember that the market's got to price in 3 days of data, right? If you hold to the Dow logic that everything you need to know is priced into the candles, when we've been closed for a weekend, all that weekend information has to be priced in. But this was an extra long weekend. So now 3 days of information has to be priced in. Look for that price discovery to last a little longer than normal. Normally we'd be done around 10 a.m. I would give it an extra 15 minutes. Let the market really price in all of this news. And there's a lot between the FX market and the energy market that needs to be priced in. Have a safe week, everybody. I'll see y'all tomorrow.